Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Thursday, February the 18th, 2010. Well, a change of trend today, and we have a candle with a lower high and a lower low. So that potential for the change of trend that we saw yesterday has come to fruition. Unfortunately for the bears, though, it hasn't been backed up by the short-term dynamics, where we have a green-bodied candle, and the size of the body is roughly the same size as the previous day. But the fact that the candle is green is not what you'd like to see in at the beginning of a downtrend. We actually have the buyers making some decent net bullish progress on the day between the open and the close. So that suggests that the first time frame downtrend that the market's in may not develop any further. The market opened roughly around the midpoint level. The bears came in and sold the market off and found support down around the 1100 region, which is that round number that we've identified previously as an area of resistance, which is now holding as support. And the buyers came back in and brought the market back up to close between the midpoint level and the high. That's telling us that the buyers did close this market in control, although not terribly strong control. But certainly the bears failed to control this market, which is what you'd like to see in a new first time frame downtrend. The buyers did show some commitment, although they did lose a small amount of commitment. They failed to close the market up towards the highs, and there was a small amount of downside price rejection, mainly when the market attempted to trade up to the cloud or the Kumo. And we know that the cloud will offer itself as an area of support and resistance. We can see here on quite a few occasions that that's been the case. Now, if the market does change trend again, we have obviously resistance offered again by the cloud, but very small resistance. So the amount of resistance that's being offered by the cloud over the next few trading days, say 3 or 4 days, is very weak. So there is good potential for this market to actually trade up above the cloud or the Kumo, and for this market to become overall positive, whereas it's negative at the moment because the market's trading down below the cloud. So there is potential for a positive setup here in the longer term time frame. Looking at the Tenkan-sen and Kijun-sen, the market is trading up above the Kijun-sen and Tenkan-sen, and that's telling us that the market is bullish in the medium term and short term time frames, but the Tenkan-sen is still below the Kijun-sen, which means that the market is bearish in terms of that indicator, and so we're getting mixed signals here. The market also found support down around the Tenkan-sen, and as we've said quite often, the Tenkan-sen or Kijun-sen can act as an area of support and resistance, and certainly here where the market traded down to around the 1101 region, which coincided with this round number 1100 previous resistance, the buyers came back in and bought the market back. So the low of the current candle becomes very important. We need to watch whether this first time frame downtrend that the market's in will develop further. If the low is taken out and we do have a first time frame downtrend continuing, then we have potential support at the Tenkan-sen around 1086, and certainly through 1080 down to 1066, which is a previous strong area of support. Certainly down to the 1050 and this swing low around 1045, there's very strong support down through there as well. Very strong upside price rejection when the market attempted to trade down through there. So that's very strong support all the way down. To the upside, though, we have quite weak resistance. We have resistance offered around this 1128 region and around the 1130 region by the cloud or the Kumo. Above there we have some minor swing highs up around 1160, and that's a fair way away if the market does break out to the upside. So there is potential for the market to appreciate. What we'd like to see is obviously the high of the current candle being taken out, certainly the swing high, and then the cloud being taken out with quite a bullish candle for the market to be set up to appreciate higher. Having said all of that, though, we do need confirmation. So the highs and the lows of the current candle become very important for confirmation of any change of trend or any continuation of trend.